Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, January 17th. We are about halfway through the month and just figuring out where this week is likely going to bring us. DXY, not too much of a move lower. We did get a slight dip yesterday, but are recovering a bit today. So many of the people who are believing that DXY is bottoming are going to start coming out of the woodwork. I do not see any confirmation of a DXY bottom, but I will say that, based on our RSI trend analysis, it is, again, poking out of a bearish trend and maybe flattening. As you recall, last time I went over this exact concept, it was all the way down, or brought us all the way to mid-November. And after that, we more or less, drifted down and ended up flattening out quite a bit. And even if you expanded this out, to here, you can see, or even, expanded out the RSI trend, it was ended up just being a flattening. So, for this, I would expect likely a type of flattening before a increase higher, but I would be more inclined to expect a tap at least 101 before we end up moving higher. This is a very imperfect science, and DXY is a very difficult asset to track due to the lack of general volatility, and of course there's no real volume for this asset either, so we're flying a bit blind. But knowing that it is dipping into support territory and or flattening territory is both very good to know for your trading. Of course, if it is flat, we can see crypto and equities, i.e. the risk bucket, move as a whole, but it is important to consider that any wonky moves up or down will push price action in the opposite direction. Meaning, if DXY ends up trying to attack 103 again, I would expect prices to cool off. And if DXY were to trickle down to 101, I would expect prices to continue to increase. And of course, if we are flat, price increase, or risk asset prices increasing is of course likely. So good to consider there. It looks like we're just kind of gonna range in a motion, or gonna motion in a range for the time being. So with that considered, let's move on to equities. So weird thing with equities this morning is we got a big jolt up higher, looked like a swing failure pattern, and then we basically had another swing failure pattern follow that, and we've been surviving this support line that I've had lined out that more or less lines up with this POC around 39.85, 39.90. And this has obviously been acting as support, has been since since over the weekend and into early this week. I expected a bit more of a jolt higher. The fact that we didn't get one is definitely worrying, but we are surviving above the previous daily close at 39.95. So if we can hold above this POC and this kind of support line, let's call this 39.85, 39.90. If you can hold above that, you have room to head to 40.40. And if you break below that, you're probably going to end up tagging 39.50 before decision point. So a strong trade confirmation would be maybe above 4,005. You've got a swing up to 40.40, and then a strong close below 39.80 will probably end up sending you lower. So very difficult area to trade. We're very overextended, and I don't want to push anybody in the wrong direction in terms of where they think assets are going to head. We do have the December highs, which also lines up with, if I can zoom out here, with these September highs more or less. So you can see December high was about 4,100, and November high, or September high, was about 4,160. So those targets are still in play if this level can hold. But it's definitely getting a lot more precarious as we move on. Using that same kind of RSI analysis for the 4-hour chart is, we peaked here. We started to cool off a little bit and range around exactly where we peaked. And now, to me, this RSI setup does look a little bit more bearish. But RSI is not the end all be all. It's just one of the more it's one of the tools that I use that gives me a little bit more confidence. Right now, I have no confidence in this trade. We're a bit overbought. We're just above the previous support level, or the previous resistance level, I should say, now acting as support. And so, a 4-hour, close above 39.90, I think would definitely be strong. But, I'm not seeing a whole lot of confidence in trade setup here. My bias is cautiously bullish. But for right now, this is a no trade area for me. I want to see Bitcoin, survive above 21.5. I want to see equities, confidently hold above 39.90. And right now, we don't have much confirmation for that, although it does look a lot better than it did around 9 a.m. this morning, when it looked like a swing failure pattern that wanted to confirm. So no trade right now until we break above the key levels. Right now, we're just sitting and ranging. If you had to put a gun to my head, I am bullish. But I do recognize that we could certainly, form another swing failure pattern here and then end up heading lower. If you're tracking kind of a swing trade, you would typically start to close out near the previous highs of the previous range is probably the easiest way to say that. So, which is about 40.40 or 4100. If you can get above 4100, you've got a lot of room to fly. But of course, it's yet to be seen. So cautiously optimistic. No point in betting too much money here unless we get a swift rejection off of 40.40 or a swift rejection off of 4100. Looking at Bitcoin, really kind of the same idea. I had these lines drawn out for the Trade the Chain community this morning. We're obviously following the first line, a little bit more better than the other ones. These start around 7, 8 a.m. and we've only moved higher since then. To really be confirmed bullish, I think we need to close above 31 or 21,500. Really need to confirm above. I don't think a close is going to be, I don't think a close is going to confirm higher protection. And so the difficulty of this is, if it gets above 21.5, it's likely to just zoom up and probably tag 2200, and then you've got a potential swing failure pattern wick where you're up here and then you just come right back down, and that doesn't really help anybody out, because the likelihood of you closing that to a T is low, and then the likelihood of you getting a trip and potentially a loss is high in that scenario. And just given the price action that we've had, swing failure pattern, swing failure pattern, swing failure pattern, we're continuing to make higher highs. But the issue of higher highs and higher lows, but the issue is we don't have any confirmation up, and we're just chopping up and down. So if you really wanted to trade this, what you'd probably do is draw this trend line and long the touches on the trend line, and then short if it breaks through the trend line. But I mean, right now, if you're asking me, Nick, are you making money trading Bitcoin right now? No. You really have to be staring at the chart, have to have a fantastic scalp strategy, and really be actively monitoring this quite often, because you're not just going to have a set it and forget it swing, because you have the risk of a swing failure pattern, which is likely, and then you have the risk of it just kind of dropping down after another tag at 21.5, because it clearly has been unable to break that so far. So again, cautiously bullish, but recognizing the fact that we have a lot of resistance, about $500 higher than where we are now. And probably the better trade, the more ideal trade would be to long 20.5 or long 20K, because then at that point you potentially got a 4-hour bullish divergence, or 1-hour bullish divergence, maybe 4-hour bullish divergence, or at the very least, all your indicators are reset. You confirmed at a support level that was already traded under prior, and then you've got potential nice bounce area to move higher. And of course, if we did trickle down, it could end up being instant, or it could end up being over a few days, which over a few days would likely be preferable, because then you kind of wash out all of the open interest, you wash out all of reset your indicators and allow more risk to enter the fray. So I'm sorry if you're looking, for trades today, but today I don't know if is the best trade idea, because I think a better short would be either, I think a better trade would be short 21.5 or short 22, and then either long 20.5 or long 20. So those are probably your better areas to catch a trade, unless you really want to try that scalping strategy that I mentioned, in which you're either longing the touch or shorting the break. So that's a pretty good outlook. And yeah, Joe Carbajal, appreciate that input. Yeah, I mean, if you are looking at it objectively, if you bought near the lows or even bought halfway up, not a bad place to take profit. I think you're seeing a lot of spot buyers take profit up here, not enough to obviously send price lower. But we are seeing a lot of profit taking up here. We did already see a lot of open interest begin to wash out, and of course shorts are again stacking near the highs. So the one issue is that when all the OI gets washed and then shorts start stacking again, you've got more fuel for a squeeze if there's not enough spot taking money off the table. But then again, if shorts are stacking up and you're already at the highs and not many people are buying either, then you're setting yourself up to really fuel those shorts and get into profit with those as well. So this is the difficulty of market psychology. When you are near the perceived local top in a cycle, the best we can do is give you a short-term strategy and a long-term strategy. Long-term requires waiting. Short-term requires exact precision on the trend that we laid out. And so looking at ETH, very similar to Bitcoin, except it is, a lot closer to recent highs. I mean, it's at 1590 and the high was, technically the high was 1607, but the highest we got with a strong close was about 1595. So ETH does look a lot stronger than Bitcoin, but, it's in the same scenario. You're at resistance. You tapped it multiple times. Typically, when we see a quote unquote power of three tap, it's 1, 2, 3, and then you end up trickling lower. Now that nothing is an exact science in TA, but that is typically what you will see. Alternatively, if you are a bull, what you want to see is confirmation above 1600. I guess, really the number is kind of 1597, 1598, but you want to see confirmation above 1600 for a zoom higher. Alternatively, like with the Bitcoin outlook up to that 22K number, we could immediately, the 21, I'm sorry, let me make sure. Yeah. So yeah, the 22 number, which was where we talked about the swing failure pattern, very similarly to Bitcoin at the 1650 level, we could get similar price action. Zoom up, tap this, launch right back down. And I think, good long opportunities in comparison to Bitcoin, 1500 and 1450 are good long opportunities. So, probably a good short if you wanted it to take like maybe an intraday short up to 1650. We seem to be getting overextended at this level. It doesn't mean that we will. So if you wanted to try and long up to 1650 and then take a short, definitely a reasonable trade. If you wanted to wait until we tapped 1500 to long, reasonable trade. And if you wanted to wait till we tapped 1430 to long, also a reasonable trade. I am cautiously bullish, but I do recognize that we are in an area where an SFP, a swing failure pattern, is likely. And we already saw it on equities before, quickly recovering back down. So, while we have been following equities mostly, and I do believe that if equities continue higher and confirm above, that 4,005 level, that crypto will likely end up moving higher. But at the end of the day, do equities, pull a swing failure pattern? We basically got the same level for Bitcoin, ETH, and equities. We're sitting above or under the highs. You've got a next target very close, and you've got the same for Bitcoin, just under the recent highs. Next target very close, just under recent highs. Next target very close. So that's why I'm warning everybody that, this is where market makers like to play games. People will short the top thinking they're going to get a fantastic trade, and people are also going to long the top thinking that they missed out on the cycle and are going to try and squeeze that last juice. And I'll tell you what, market makers know this and will negatively impact the market to the highest degree to basically hurt those traders who are making overzealous trades at probably the wrong time. So if you're max short, you go long and you get cut at the next target. And so you start to close your shorts up here, it fuels it higher. And then the longs are like, maybe we go higher, or maybe some start to take profit. And then you start to dip right back lower, and either your longs end up, closing out of profit or with not as much profit as you thought. And then shorters are left in the dust because they shorted here instead of up here and then got cut right back down. So, this is how you induce max pain in the market. And this is, thinking like, a market maker or liquidity provider, in the sense that you're not acting like a retail participant. You're acting like the people, who move price and size around. So that's, you want to act like someone who's moving size, although you're not actually moving size. Because if you're acting like a retail participant, if you're acting like, an average trader, typically average traders do not end up being successful long term, and market makers will hurt them. So try and do your best to think like a market maker, and I'll try to present different ways of thinking about trades while still giving you, the guidance that you need to actually take good trades. So that's why this area worries me. I don't want to take a short because I could get squeezed higher, and I don't want to take a long because I could get squeezed lower. So I'd rather wait for taps at the key levels, because if I shorted the first tap at 1600, I made money. If I shorted the second tap at 1600, I made money. Maybe, not every time does that system work, but, at this point, when it's, attacking this level so many times, it's best to let it wait and play out, and then maybe, short the next level. Because if you look at how ETH plays level to level, now we could zoom, and this is why I'm not saying just set orders at these resistance levels and forget them. But if we do start to wick up and come lower, typically, a swing failure pattern in the making, and then you've got a good short opportunity. So you've got to obviously take that discretion, for yourself, and decide exactly what action you want to take at that time. But, I do think that if we start to creep up to 22, 1650, and 40 for equities, then you've got a pretty good short opportunity back to the recent highs, if not a potential swing lower, as the month progresses and we start to recover off of these highs. And preliminarily, it's tough to call a bottom or say what you exactly think is going to happen too far in the future without any good indicator, because obviously the macro situation is looking better than not. But if we zoom out and kind of look at this rally in context, potential shoulder, head, and shoulder, and that neckline, it's more so up here, but attacking that neckline, forming that head and shoulders formation, typically a very common pattern in the markets. And we do have this POC lower, which also coincides with the highs back in June and July. Not the highs of June, I should say. So this would be a really good support level. And I think, if we can, I'm sorry, let me rephrase that. If you can stay above this 200 exponential moving average, you've already got your trajectory higher. Although you could see more volatility at 40.40 back for another, rejection at that level of support and higher. But also, if you get rejected and come back lower to that 39.50 level, and then you get back above the 200 exponential moving average, then you've got a really good boost higher. And that's why I think this area is tough, because you're bouncing off the 200 moving average on the daily. You moved higher. You didn't exactly accept higher. So typically, you might creep lower and then try and re-accept back into that level again. And if we either way, if we come up here and then come back down and accept, that's a fantastic long opportunity. If you drop down to 39.50 and then come back up and accept, which is right around that 39.90 level, could be a little bit lower if we drop on the daily perspective. But if you get above that 200 exponential moving average, then you've got a fantastic trade higher, because what that's signaling is that the 200 exponential moving average, which is typically a very important moving average for the broader market, you've got continuation higher. So you look confirmed higher, immediately moved higher. That's what we wanted to happen here. It has not happened yet. But that doesn't mean that it couldn't still be on the horizon. And then here, rejected, and then it started to move lower. Here, rejected, moved lower. Here, moved higher, no acceptance, moved lower. Here, got above, no acceptance, moved lower. So you can see how momentum ends up playing off of this 200, this moving average, and we're hovering right around it. So your shot is pretty much 50-50 on where we're going to head after this, which is why it's better to wait for confirmation. And that confirmation can sometimes take days, which is why it's always better to be patient. I'm always going to come in here and give you potential short-term trades, but I'm always going to advise you with the best of my knowledge. And that is, we're in a very, very interesting position that I think could definitely push us higher, but we need a little bit more confirmation of price action to convince me that leveraging large amounts of money in the bullish direction is the right play. And that's basically all I'm saying. So if you've got more questions, always feel free to put them in the chat. Tag me on Twitter at TraderNMX, or hop in the Trade the Chain community and ask those questions. And we always put, these green lines are always associated with our predictions for the day. And I always give, 2 to 3 routes for price action. And then I always give my preference for where I believe price action is going to head, just so you understand both sides of the coin, and then you get, my perspective. But at the end of the day, you're the one clicking the buttons. You're the one, who's sizing up your risk, and I am not, your fund manager. So it's always, always with the guidance, but letting you have the willpower to make your own decisions. So if you want to reach out and ask questions, please do. I'm available 24/7. And if not, please, join us for the session tomorrow. And hopefully, we've got a good setup. I'd really like to see taps at the highs or the lows, and that would give me a really, good signal for a trade, I think, in the opposite direction. I don't think with the way that the market's headed, we're going to get, too much straight down, but, we still have earnings. We still have, tech earnings coming up, and then we have FOMC on the 26th. So I believe the FOMC is going to be next Thursday, next Wednesday or Thursday, whatever. Actually, let's double check when the 26th is. Yeah, so it's next Thursday. So we've got 8 or 9 days until the next likely rate hike, which is expected to be 25 basis points, which could bring more volatility as well. So that's why I've been kind of cautiously optimistic, because in a week's time leading up to FOMC, we don't have a whole lot of bad news to push us down, but we obviously have seemed to price in a 25 basis point hike along with lower CPI, and therefore the market may have a bit of a snapback to kind of reprice potential expectations as we come into FOMC. So all good considerations. Tomorrow, I'm hoping for a better trade setup, or potentially tonight. Seen a lot of volatility around the daily close. If you actually go look at Bitcoin, we can see so 4 o'clock, which is the daily close yesterday, spike higher, move lower. 4 o'clock daily close on Sunday was spike lower, move higher. 4 o'clock daily close. Spike lower, consolidate. 4 o'clock daily close, zoom higher. So I just pointed out 5 days of daily closes, volatility. So expect the volatility around the daily close, which will come in about, I believe, 4 more hours from where we are standing now. So no good read for that right now. I tried to think of if I can make a good inference for you guys, but there's no magic trick to where the volatility is going to press. But if we're at resistance at the close, expect probably a bit of a drop off due to the lack of, this was a strong pump, and then the daily close, and then we moved higher. But that was also a week. So, important consideration here. That was a Friday daily close, and where U.S. markets closed as well. So, risk, where's risk money going to go into crypto 24/7 market? And then we saw some pretty gross volatility after that, moved higher. Then we had another one where we had to move lower. So higher, lower, maybe we get higher today. Maybe that's the push up to 22. where we get another scare, and maybe get a bunch, maybe a bunch of people long here, shorts close, and then we end up dropping back down. But this is probably the best trade I'm looking for now. And then if we end up getting down to 20.5 or 20, then I'll start to think about longs. So good luck. Happy trading. Sorry for the long-winded one today, but hope you got a lot of good information out of it. I will talk to everybody tomorrow.